Coming up today on the Blockchain Report, Bitcoin is sitting around 112K, and it might be because Senator Cynthia Lummis dropped a new crypto bill that basically tells the SEC and CFTC to play nice and share their toys. Bloomberg's Mike McGlone says Bitcoin could crash to 10K, while Tim Draper is calling for 250, which is basically a $240,000 agreement in the world's most expensive coin toss. And a whale just woke up after 13 years to move 52 million in Bitcoin, proving even seasoned hodlers eventually need to stretch their fins. All that right now, let's go! There we go. Good morning, my digital desperados, and happy Monday! Welcome back to a new week of the Blockchain Report. I'm Hank Hudson, broadcasting to you live from San Francisco, the city where potholes are deep, the rent is expensive, and the only thing climbing faster than Bitcoin is the cost of parking, groceries, car insurance, streaming subscriptions, coffee, college tuition, Taylor Swift tickets, haircuts, and healthcare. Great world we live in. Now, before we dive into today's buffet of price action, policy blunders, and ETF fan fiction, do me a solid and punch that like button like it owes you money. And don't forget to follow RoxomTV and yours truly at Hank at RoxomTV, because in this market, you either have conviction or a good wingman, and that's me. All right, let's separate the whales from the minnows, the laser-eyed faithful from the weak-kneed wobblers, and see who's making it rain sats in this morning's market rundown. Let's roll. All right, this morning, Bitcoin seems to be on the ups, kind of. Right now, we're chilling right around that 112.5 arena. We were down as low as around the 110.8s earlier in the last 24 hours, but things seem to be picking up steam. Bitcoin still a market cap of over $2.25 trillion, so we're not going anywhere. Let's take a look at how the rest of the crypto market is looking. If we can bring that up here for me, gang. Here we go. Oh, we got TradFi. We don't have it, so we're going right to TradFi, no worries. Right now, the Dow Jones Industrial currently sitting above that $45,000 mark. We got the S&P 5 just beneath the $6,500 level. The NASDAQ Composite right around 21.5. And last but not least, we have MicroStrategy currently sitting at about $3.20 a share, down about 2% this morning, which is a little strange considering with Bitcoin being on the upswing, you would normally see the same from MicroStrategy stock, as wherever Bitcoin goes, their stock is usually sure to follow, but we'll keep an eye on that and more. We got a lot of stories to cover in this morning, so let's get right to it. It's time for our bull run. Let's go. All right, welcome back to this morning's bull run. This is the part of the show where we go over the top stories of the morning so you can get a few extra hours of sleep. No news scrolling for you. We got you covered. And let's get it started with this first one from the rumor mill, which has gone into overdrive recently with claims that Tether has secretly sold Bitcoin to hoard gold. The deceit, the betrayal. Now, the theory started when independent analyst and YouTuber Clive Thompson took a look at auditor BDO's attestations. He pointed out that Tether held around 92,650 Bitcoin at the end of Q1 and only 83,274 at the end of Q2. Now, on paper, that looks like a nearly 9,000 coin sell-off. Thompson confidently suggested those missing coins had been swapped for gold bars. It was bearish clickbait gold, if you will. Now, Samson Mao, CEO of Jan3 and one of Bitcoin's most tireless hype men, quickly shut it down. He explained that the missing Bitcoin wasn't sold. It had been moved into Tether's XXI initiative, a long-term investment vehicle. The actual transfers, well, 14,000 Bitcoin went to XXI or 21 on June 2nd. Another 5,800 Bitcoin followed in July. So when you include those July movements, Tether's net Bitcoin position actually increased by at least 10,400 Bitcoins. Or in other words, the bearish headline fell apart the second anyone did any basic math. Now, Paolo Ardoino, Tether's CEO, confirmed it. He said no Bitcoin was sold. Instead, part of Tether's stash was simply contributed to XXI. And he doubled down with his own line, saying while the world continues to get darker, Tether will continue to invest part of its profits into safe assets like Bitcoin, gold, and land. This isn't a company dumping Bitcoin. It's a company stacking Bitcoin, gold, and even real estate as part of a diversification play. Tether has already amassed $8.7 billion worth of gold, nearly 80 tons of it sitting in Zurich vaults, and has been exploring opportunities up and down the gold mining supply chain. And yes, they've rolled out a gold-backed token, XAUT, which recently cracked a $1.3 billion market cap and forced its way into the crypto top 100. Now, that doesn't mean they've soured on Bitcoin. DeFi researcher Tran Hung reiterated that BTC remains the core focus, while gold and land are just additional hedges. Meanwhile, critics keep trying to spin any shred of data into bearish Bitcoin narratives. Samson Mao summed it up bluntly, saying, "Seems everyone is desperate for bearish Bitcoin news these days. Tether is mega bullish on Bitcoin on all metrics." So the verdict here is actually quite clear. Tether didn't dump Bitcoin for gold, it added more Bitcoin, more gold, and more reasons for the rumor mill to stop pretending spreadsheet errors equal market collapse. And the Senate dropped an updated crypto bill, and the message is actually pretty simple. The SEC and CFTC sit in the same room and use your indoor voices, okay? Because the bill clarifies that if you tokenize a stock, it's still a stock. Because apparently we needed a law to say wrapping an apple in plastic doesn't make it an orange. Staking, airdrops, and DPIN are excluded from securities law. NFTs also get a pass. Buying a pixelated gorilla is officially not the same as trading Apple stock, apparently. Section 101 blocks the SEC and private firms from suing existing tokens unless fraud is involved, which is Congress's way of saying, stop charging rent to everyone in crypto just because you feel like it. Then we get to the fun part. Section 701 creates a joint advisory committee between the SEC and CFTC. Section 702 forces them to resolve disputes together. So basically, regulators now have to do couples counseling before suing anyone. Section 505, the Blockchain Regulatory Certainty Act, protects developers from being treated like money transmitters just for writing code. DeFi platforms get exemptions so they aren't forced to play by centralized rules. And self-custody wallets are safe, so you can hold your own Bitcoin without Gary Gensler showing up in your kitchen. Yikes. Senator Cynthia Lummis says she wants this on Trump's desk before the end of the year, and she means it. Look at those laser eyes. And banking votes this month, well, agriculture votes in October. The full Senate could vote in November. So by Christmas, developers might finally know if they're criminals or just nerds with keyboards. Watching out for that. And for those of you not paying attention, Bitcoin climbed above 113K on Friday thanks to a jobs report so weak it basically begged the Federal Reserve to cut rates. The U.S. economy added just 22,000 jobs in August, with unemployment ticking up to 4.3%. For reference, that's the kind of number you expect to see during a hiring freeze at a lemonade stand. The Bureau of Labor Statistics breakdown didn't make it any prettier. Private employers added 38,000 jobs. Government payrolls shrank by 16,000, and manufacturing lost 12,000 of its own. That's the whole trifecta here. Businesses barely hiring, government trimming, and factories shedding workers. Wages up 0.3% on the month and 3.7% year over year. The labor force participation rate edged to 62.3%. Average weekly hours stuck at 34.2. The U6 underemployment rate, the one that actually counts people working 2 part-time gigs and still eating ramen, climbed to 8.1%. Or in other words, workers aren't making more money, they're working the same hours, and more of them are struggling to make ends meet. But hey, Bitcoin is up, right? Well, why is all this happening? Well, because weak jobs mean one thing in Wall Street bingo: rate cuts. Future traders immediately priced a September cut as a near certainty. Yesterday, the odds of a 50 basis point cut were 0. Now they're at 12%. The odds of no cut at all, a big fat 0. That evaporated faster than your boss's promises about room for growth. Now, Bitcoin traded above 113K during the session, hovering just below that on real-time charts. Risk assets love easy money, and Bitcoin is the risk asset that tends to love it most. The soft jobs data capped a week of warning signs. Initial jobless claims rose by 8,000 to 237,000. ADP payroll growth cooled. Basically, all the high-frequency indicators lined up to say hiring momentum is definitely slowing down. Meanwhile, the services side of the economy is doing fine. Too fine, in fact. The ISM services PMI rose in August. New orders advanced, and the prices paid index dipped only slightly to 69.2. Or in other words, demand is holding, but inflation pressure is still sticky. There was some good news for productivity hawks. The Labor Department revised second quarter non-farm productivity up to 3.3% annualized and cut unit labor costs down to 1%. That's the kind of combo that supports disinflation at the margins. And then, of course, there's trade. The U.S. goods and services deficit widened to $78.3 billion in July. That's the biggest gap since spring. And as imports rebounded, mind you. Some of that's tariff front-loading, some of it's resilient demand. Either way, more proof the economy is slowing in weird and uneven ways. Now, all of this tees up for the Fed's September 16th to 17th meeting. If services inflation cools, labor conditions keep softening, and costs stay contained, the Fed has room to start easing rates. And crypto markets, well, are already betting on it. The bigger picture, though, is slower hiring plus sticky inflation equals a finely balanced policy debate. But for Bitcoin, it's actually a lot simpler. More dollar liquidity equals more upside. Now, at the time of the press, Bitcoin's market cap sits around 2.23 trillion, daily trading volume around 54 billion, and dominance at nearly 58% of the total $3.85 trillion crypto market. So yeah, the economy may be wobbling, employment is climbing, and trade gaps are widening, but Bitcoin, it doesn't care. Weak jobs data means cheaper money, and cheaper money means 113K Bitcoin. Because nothing says financial system like bad news for workers turning into good news for coins. We're taking a break, but when we're back, we're going to be joined by our first guest of the day. You might know him as Big Beat. We, of course, are talking about Stephen Orr from Quasar Markets to help us read the charts. So we'll be back with him and much more here on the Blockchain Report right after this. Stay tuned.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
All right, and we're back. It's time for Market Check with Mr. Big Beat himself, Stephen Orr. Stephen, how are you on this fine Monday? Always a pleasure to have you on the show.
What's going on, Hank? Last weekend was Labor Day. You know, a lot of times when you're in this kind of time frame in the markets, things get quiet. Usually the people chill out. They're going out, they're doing picnics and baseball games and sporting. And of course, this week was football. You would expect that the markets would chill out. And guess what? They haven't. We're still seeing some volume in the markets and people are still moving. And we saw that usually in low volatility and low volume markets, that's when the whales take advantage of it, right? They're like, okay, we got you. We're gonna be able to pump around and move things around. And we saw that, right? We saw where the whales were trying to dump some of their Bitcoin and push it into Ethereum. Okay, great. And I've always said that that's a good thing, right? The OGs, the whales out there hold all the coins. That sucks. It does not help everybody. We need it out there in the public. We need them spending some of that to make new projects, get things going. I love that. But at the same time, be careful how those whales move, right? We can take advantage of them. And I did that. Several times over the last couple of weeks, I have been taking advantage. Buying, not selling. I repeat that one more time. Buying, not selling. Why? Because look, we know which way the directions of the markets. Now, I can be accused of being a Bitcoin maximalist. I can be accused of, hey, all you care about, Steve, is one direction. You don't even know about the shorting side of it. I've been shorting markets before most people have been alive, right? I understand and I agree that there are times when you should be shorting the market, taking advantage of that. This is not one of those times, right? Just talk about right now with Michael Saylor, talk about Tom Lee. Those people were not doing that, right? They are starting new companies. They're building, they're piling up into WorldCoin and all kinds of fun things. All right, that moves the needle. But let me show you with my charts what it is exactly, the overall picture of what's happening. Hopefully you guys can see them at my charts here. I have added the daily chart for Bitcoin. All right, this is the daily chart of Bitcoin, and I've added, well, I have lots and lots of technical indicators on this thing. Here's one that you should be looking at and laying over your system on the daily chart. That's linear regression. Linear regression. You see linear regression. Look at this, almost the pig points. Boom, boom. Buy points, sell points. It's not that hard to understand. Last time we got to 123, 124,000, it was a sell. Last time we did that, it was 120. Why? Top of the linear regression on the daily chart. Back in June 22nd, what did we see? Bottom linear regression. It slipped through a couple times, but it was a buy signal. Here we are once again, bottom linear regression a few weeks ago, back there on the first a week ago, and now here we are already making that turn going back. We're not going back to 124 or 120, we're going to 128. Right? Oh. That's the difference here. That's what I'm saying to people. Look, this is why I'm buying dips. I'm not selling. This is not a seller's market. Here's a weekly chart. It's not a seller's market. Okay, so in the weekly chart, linear regression, told you. Right there it was back in April. That was a big buy down there back in April the 14th. And here we go. Yep, I get it. 124, where we were all selling, including myself. I sold some of that profit off. Now I'm taking that profit I've been buying the last few weeks. Why? Because here they are. They're giving you the answer. Look at a monthly chart, same situation. So if I look at a 1 hour chart, all right, I know everybody's going to say, all right, well, there you go, Big Beat. You're right, linear regression, a little bit of selling. They're absolutely right if that's your time frame. I can go back to what's very important to Wall Street and institutions is the 3 hour chart. I've talked about this on your show a couple times, where there were a couple of selling points, right? And there they are, 1, 2, 3, the buys. But we had a little trouble here. We know that at the 113 handle here. And back a few weeks ago, we talked about it at the 116 handle. And of course, that top at 124. Now that is what Wall Street loves and they've been playing with it. But now that handle, that linear regression on the 3 hour is turning north too. So go back to that daily chart. This is what I'm seeing. Yes, it's a struggle right here. I'm okay with it because why? Even your MACD is confirming it. So all of the technical indicators that I like, RSI, MACD, linear regression, all the big players are all giving you a thumbs up to the upside. So yes, there may be some more selling by the whales. We understand that. I'm okay with that. I am going north. So that's why I'm saying, Hank, it's okay to be a buyer here. I have been a buyer, and I'll tell you what, we've been winning with buying these dips. So BTFD.
Love to hear it. It sounds like the winds are certainly blowing in the right direction right now, Stephen. So it begs the question, could that be in part because next week we have the Fed, they're meeting up September 16th and 17th. The whole market is betting on a rate cut. Bitcoin's at 112 right now. Do you think this rate cut could be what gives us the next liftoff, or could it be that this rate cut is already baked into the current price action? What do you think?
100%, Hank. This thing is baked in. It's like a baked potato, man. This thing is so into the market, it's not even funny. This morning on my other show, they were talked about it, 50 basis point cut. If that happens, then the whole world's falling apart, and then Bitcoin will go because we know that money will be coming out of the stock market into crypto. We already know that, right? I've talked about it on your show a couple of times. The thing that you really want to watch is the fiats, right? You want to watch the yen, you want to watch the dollar, the Dixie, and see where that is going to. If the Dixie is rising, then against the fiat, obviously Bitcoin is going to come down. But one Bitcoin is still one Bitcoin, so I don't know what that's all about. But the truth of the matter is, right now, we have to keep our eye on the Fed. I understand. But if the Fed says, we might have made a mistake, we got to go bigger than we were. We might have made a mistake because we're going to now be political and we're going to bend to the knee of the president. Okay, that's a different situation. And yeah, things are not good. And I think at that point, you're going to have to say retail will probably start to get nervous themselves and start to take zero DTEs on them. So for me, no, I don't think so. I don't like that too much. Let's go nice and steady, wins the course race. I expect 3 rate cuts here now. obviously in November and in December. So, and you're hearing that from the Fed saying, look, all right, the two things we needed to watch was obviously inflation. Inflation has reared its ugly head once again. Okay, great, but it's also jobs, and we're seeing the number of jobs coming into the market is the least since what 2008. We all know what happened in '08. So I want to be careful here. We need to the course needs to be set for longer term, right? And if that's the case, we do need some rate cuts. Why? It'll stimulate the economy, get people borrowing money, create new jobs, create new companies, create all kinds of new technology. That's what makes things good, right? We want to see that. But I'm not seeing that really. I'm seeing a nervousness in the markets all the way around. And when you do that, people turn to alternatives. But right now, what's going hot? It's gold, it's silver. Silver 41.50 now an ounce. Gold making all-time highs. Those are the kinds of things that people are going to. And if you're going digital gold, it's not Ethereum, it's not Solana, which, by the way, I do like, but it is Bitcoin for me, right? Because it has to be, you have to be careful, right, as we protect our portfolios. But my goodness, what's the difference between 116 and 112? Okay, it's 4,000 points, but at the same time, that's where I want to buy. Why? Bottom linear regression. Why? Technical indicators. Why? Maybe, and I think so, that the OGs, the whales, have slowed down their selling. So all of these things look to me as a buy opportunities. And if you thought that was bad, why would Tom Lee and Michael Saylor say no to all this? They're not. They're buying. So here's what I'm saying to everybody out there. Protect the portfolio. If you're not protecting the portfolio, that's on you, right? But this is when you get a chance to buy. Oh, I don't know when to buy. It's expensive. It's not expensive when we're going to $250,000. It's not expensive when we're going to $1 million. It's expensive because because you bought it 124. Great, buy some more. Dollar cost average is exactly what they need to be doing. But what you need to be thinking about is long-term future, right? What is it that what is it that we're trying to solve here? And with WorldCoin and these other coins that are coming out, all right, does that leave Bitcoin behind the dust? Nope. It actually legitimizes crypto in general. So when I say, Hank, let's go long, I'm okay with this. I've been buying for the last 4,000 points on Bitcoin here.
Yeah, it's really the most expensive thing is the mistake from just not acquiring right now, because if you are like the rest of us here, when Bitcoin's 500,000, $1 million, then all of a sudden a mistake now becomes very, very expensive. Because right now we're only stuck kind of between that 110, 120 range, and you feel like this first rate cut is probably already baked in. So when do you think we're going to see the next leg up? Are we going to be waiting till October, November, maybe December for future rate cuts to actually impact the price of Bitcoin?
I think 10 rate cuts are already priced into this thing, right? It's not the rate cuts. I think people are so enamored by what the Fed is doing. I don't know what the Fed's going to do. I don't know what they had for lunch. I don't know how they're feeling, right? I don't know. But the one thing that dictates everything in this world is price. Price is the only thing that we actually know. What is price telling us? The price right now is telling us we're going north. It's telling us that we're not done buying, right? It's telling us that, look, you hear the noise, all the news around Bitcoin that, oh, well, Bitcoin touched 124, so it's over, the game is over. Man, we're not even in the first inning. This is like talking about the internet at the beginning. We're not even in the first inning of this, right? So when I talk about the future, I had to think about a little bit farther ahead than what's going to happen. I don't even know what I'm having for dinner tonight, right? So if I don't even know what I'm having for dinner, what am I thinking about Bitcoin, right? How many people are out there 100xing and 300xing Bitcoin? A lot of people are. So you need to think about that, right? Is that in your game plan? Hopefully not, because if that's in your game plan, then you're going to miss out on the next part of the game plan. The next part of this game plan is, where is accumulation happening within the crypto markets, right? One of the things that I liked, and I've talked about this in your show, I like Solana. But when Solana got under 200, to me, that was definitely an accumulation zone. It was very simple. We talked about that in your show. And guess what? Look where Solana is today, right? Ethereum. Yeah. Why is Ethereum being a place where it's accumulation? Because that's where the institutions are accumulating. Even the OGs were selling Bitcoin to accumulate. So when I talk about protecting the portfolio, I don't mean, well, let's just buy a few other things. Do what they're doing too. They're telling you, they're actually telegraphing to you what they're doing. So, we always call it one thing. We always call it picking up nickels in front of a steamroller. Meaning, I don't want to be that little guy getting run over by the institutional steamrollers. I don't want Michael Saylor buying my Bitcoin. I want to be buying Bitcoin before he's doing it. So when I talk about accumulation, I want to accumulate when they're accumulating. Right? The market's a mechanical machine. It doesn't care about you. It doesn't have feelings. It's not worried about, your love life. It only cares about one thing, the direction and the price. Right? So what it's saying to me, it's saying, look, they know, the institutions know, BlackRock knows, Goldman Sachs knows, JPMorgan knows, firms around the world know they are accumulating. They're not stopping. The countries are accumulating. El Salvador, just on an average, they've been picking up one Bitcoin a day. They didn't buy one Bitcoin the other day. They bought several, right? They know when the accumulation is. Why? Because they're all in cahoots, and I'm okay with that. So why be the person picking up nickels in front of a steamroller? I don't want to be that.
And rightfully so. As someone who analyzes the charts and has a very good familiarity with these systems, right now, Bitcoin's dominance is kind of at a weird spot. I think we creeped as low as around 55. It seems to be inching its way back up. Do you see that as strength in the Bitcoin market? Does that mean that this hot altcoin summer is almost over? What is that telling you in terms of where you see Bitcoin headed in the short term? We're talking the next couple of weeks and months as we get toward the end of 2025.
That's a great question. Let's take a step back. Let's look at the overall equity markets, right? If the markets are controlled by a few Mag 7 companies, Google, Facebook, Meta, if you think about it from the perspective of NVIDIA, AMD, when you have a concentration of one coin or one thing, that's usually a bad sign because it tells you that, okay, look, I get it. Bitcoin's the Mac Daddy, but we need other coins also stepping up. And we're seeing that, right, with Ethereum. I don't want to see Bitcoin at 60 and 65 and 70%. I want to see things moving, meaning I want to see technology growing. And technology isn't just Bitcoin. It's not, right? I want to see blockchain report, right? I want to see these projects moving forward, and they're not all running on Bitcoin. They're running on Solana. They're running on Ethereum. They're running on Chainlink. I love that fact, right? And if we have one person controlling everything, if Michael Saylor is controlling all of Bitcoin, then it's hard to push the price up. So I want to see other projects moving forward. And the only way to do that is if the dominance isn't always there. Now, do I want to see the dominance of Bitcoin staying above 50? Yes, because I do like Bitcoin, but I don't necessarily have to. Look, if NVIDIA is we see NVIDIA now coming back down, and that's pulling down the rest of the market. So I don't want to see that, right? If I know that that's AI issues, then I don't really want to see that. I want to see the whole market going up. S&P 500 did what? They added AppLovin, they added Robinhood, because it is changing. The world is changing. And so as the world's changing, those corporations that are adding to S&P 500 aren't adding old school companies. They're adding the good companies like Robinhood and AppLovin. Why? Because they're changing the future. So I want to be a part of the future. I don't want to be a part of the past. Blockchain, crypto, Bitcoin is a part of the future. So if I think the part of the future is Bitcoin at 250,000, or as Tom Lee also agrees, then why do I care if it's 112 or 116 or 124? I want to be accumulating. And right now, not only am I accumulating, but I'm also accumulating at very strategic points. Technical analysis telling me that. Price dictates. So if price is dictating and saying, look, okay, yeah, it's 55% or 60% dominance and Bitcoin dominance, it's okay. But I also want to see Ethereum and Solana and Chainlink and all the other great coins and projects out there moving forward. So if one coin or one company or one person is controlling everything, then that's not a true mechanical market. That's just manipulation. And I don't like manipulation. I want to see things moving. And I love the markets right now. I think they're working very well. Do I think that there are some nuances I'd like to change? Of course. But I think the markets are working well, and I understand it. Now, on the flip side of that, I just saw a few companies saying that, oh, well, the economy is fine, people are fine. They're not really fine right now, right? If you go out and spend some time out in the public, I've been flying for the last, as you know, the last month everywhere, right? I just got back from North Carolina. I was in New York. I've been all over Chicago. I've been Miami. I was just in Key West. The economy is not great. All right. So people need to understand that. So when you're protecting your portfolio, does that mean the stock market's going to keep going up? Nope. The economy does not equate the crypto market. The economy does not equate the stock market. It's what people are investing in for the future. You're not investing for next day, or you're not investing for, okay, 5 minutes later. That's trading. When I talk about these crypto and buying Bitcoin, I'm talking about investing, because that's your future. We know what the future looks like. Those of us who have visions, has 2020 vision in the future, we know it's going higher. So why do I want to do anything else but accumulate? So when I look at the economy right now, job losses, we don't know about the tariffs, it's getting even worse, and lawsuits. Why do I care? I'm investing for the future. I'm not investing for tomorrow. Now, if I'm trading, I'm not trading Bitcoin, right? Because that's the Mac Daddy, as we all say, right? So trade other things. Trade Solana when Solana gets up there, because why? They've got to spend some Solana in order to make some of these projects happen. So that's the gas, right? So great. Trade Solana. Trade Ethereum sometimes. Great. Don't be trading Bitcoin. Bitcoin's the accumulator.
Bitcoin's the accumulator. Don't trade your Bitcoin. Those are the words to live by for sure. Now, Stephen, as you're watching, you have that unique ability, given your experience and breadth of knowledge in the space, to kind of look at things and kind of form the bigger picture and see where things are going. Right now, in terms of the charts, what's kind of your North Star for kind of trying to figure out where you think the market is headed? Is it ETF flows, Bitcoin dominance, M2 money supply? What are you really looking at to see where things are headed next as we make our way into Q4 here just at the end of the month?
That is a great question. Let me show you my charts here. I'm going to pull up a daily chart of the dollar, the Dixie as we call it in Wall Street. Again, you can see where my lines have been. I'm going to pull up a weekly chart of the dollar. You can see my linear regression here and where my sell points were and where my buy points are. The dollar is getting weaker. You just saw where Japan's minister just resigned. You're seeing problems in France. You're seeing problems everywhere. And people are dumping dollars. I can also show you the oil market too. Why am I talking about oil when we're talking about Bitcoin? Well, guess what? Institutions are trading oil. Institutions are trading buying Bitcoin. They have to pull money from somewhere, right? They got to pull up from the money markets. They got to pull up from somewhere. And one of those points that they're pulling from is the dollar. So as the dollar gets weaker, that also helps Bitcoin as well. When dollar gets stronger, Bitcoin gets a little bit weaker against the dollar, right? So let's pull up something here a little bit different that probably a lot of people aren't expecting me to say, and that's the silver market here. Why am I saying the silver market? Here's a monthly chart of silver. I'm gonna go back to 2011 and 12, right? We all know what happened back then. Markets were going crazy in 08 and 11. Here we go again, right? I've said $43. So we know that retail is buying silver hand over fist. We know that institutions and countries are buying gold. So if they're buying gold and those alternatives, right, they're not buying equities. They're buying Bitcoin. They're buying gold. They're using what? Their dollars, their fiats in order to do it. So they're dumping their fiat, their dollar, to buy metals. And that's what I'm saying. If you look at the dollar versus silver, you'll see exactly what's happening, right? You know the price is going up. This is what's happening. Silver versus the dollar. So the dollar weakens, metals go up. So if I were to pull that right back, and I'm going to do it with oil. Here's an oil market. I'm going to pull up a weekly chart of oil, USO. This is what I'm saying. I'm going to pull up, another one we pull up here is oil in general, right? I'm going to pull up oil futures, crude oil futures here. Look at that, 62.29 a barrel. Now, I'm just going to go back to 2022. There it is, June, right? 3 years ago, we've gone a straight line down. Oil. If the economy is doing well, oil prices go up. Okay, well, big beat. Okay, we know that Saudi Arabia and OPEC are dumping more oil. That's right, because they're running out of oil. So if money, these institutions are buying up oil because they got to have gas, right? Lipstick, plastics are being made out of oil, then the economy is doing well. So the economy, as I've told you, is not doing well over the last 2 or 3 years. This is not a Trump thing or a Biden thing. This is an overall thing, right? Economies are figuring out that, look, France even said it. Their debt's way out of control. Japan, they can't get their debt under control. Like, I think it's like 250% of the GDP. So the prime minister resigns. They got 5 people who are looking to be prime minister of Japan. They can't figure it out, right? And I love Japan. Everybody knows that. But you're seeing oil falling. You're seeing these things. So that's why money is still moving into crypto and it's moving into metals. So it's pretty obvious what's happening. You know where the money's going. I keep saying, all right, well, if people are pulling their money out, where are they putting it into? Are they putting it into the 10-year? I don't think so. So when I look at the dollar, look at that thing, it's just falling apart. So while I think there might be a buying opportunity here for a longer term, I'll pull up a daily chart here. We might be seeing a little bit of buying here in the Dixie, but I'm not seeing it yet. I'm just really not strongly considering it right now. Here you go. There's a dollar yen, right? We're just weak. You look at it from the perspective of not too long ago, back in January, the dollar versus the yen was at 157. So you would think that, hey, we would be getting back to that. Well, we're trying, not quite there. So what does it go to? It goes into Bitcoin. There it is. So that's what I mean. It's not just big beats saying that we're buying Bitcoin. It's technical factors. It's news. It's institutional buying. It's literally the world falling apart and the world. So it's arrogant of us as Americans to say, hey, we're the only ones that are a part of this whole world. We're not. We're a very small part of it, right? There's other countries that are involved. El Salvador is a very big part of this, or they're buying, right? Whales are not just all living in the United States. That's arrogant of us to say that. It's a worldwide picture. So as dollar money coming out of the Dixie, it's going somewhere. And part of that big money is going into Bitcoin. That's the whole key. It's not just one thing. It's several factors making Bitcoin popular.
Yeah, absolutely. And in today's global economy, you need to be able to look at all of these factors, not just the charts, but sentiment and how that relates to different parts of the world. And your platform, Quasar Markets, allows investors to do just that. So can you just give us a quick rundown, Stephen, of how Quasar Markets prepares little minnow traders like myself to actually compete with the big boys out there, because you guys do offer this full 360 view?
I'll show you. This is our website, Quasar Markets. Thanks for asking. I'll log in. A lot of people want to see what my charts look like, so I'll log in. But as you pull it up, right, you can see, and I know everybody wants to see my charts, but you can see here, I've got it all the way ready to go. I've got my AI ready to go. And then some of the databases that I'm looking at news, right? I'm looking at what's going on in Twitter. So if I were to ask the questions, what's going on in Bitcoin, it's going to give me the answer. And it's not going to give me the answer based on whatever the latest, thinking of Perplexity or Chat GPT. I've got 18 AIs running in this thing. So I want to get a better picture. And as I ask those pictures, I can also see the live feed what people are asking. If you look on the right-hand side, gold. They're asking about gold, right? That's why it's so important to me to have every single part of this. And you'll see on my own, we talked about it 2 seconds ago. I've got TV going on in France. I want to know what's going on in France. It's not just what's going on here. And you can see as I answer the question, it's not giving me one little answer to one little question. I want to know, why are people doing it? What are people buying? Why are they doing it? There you go, right? Over 2,000 Bitcoin was picked up, valued at 217 million between these dates, right? We're seeing the actual answers. I want to know the actual answers. I don't want to know what possibility or Wikipedia is saying, or I want to know institutional knowledge. So I put institutional data inside this system. The very second that I get the answer, I want to know where it came from. In this case, news BTC. So I did get the news. I did get the institutional side of it. I also want to know what all the other questions are around it. So how many Bitcoin did strategy buy? Completely. I don't want to just know a news article. I want to know what their strategy is too. Why? Because I want to be able to emulate that. That's institutional. That's what I wanted to do here, and I did that, right? And I've asked questions about South Korea and gold trade anticipation. You can see right here where I've asked in the past, or how does Trump's tariffs impact gold prices? All of a sudden, it's not one answer to one question. I'm giving you a better answer to a better question, to questions you didn't even know to ask, and giving to you at an institutional level or giving it to a retail level, and doing it in a way that you understand it. We've also added like 4 different AIs just around that alone, so you'll be able to understand it. It's also layered. There's like 17 layers of AI on top of AI on top of AI. Why? Oh, that's just too much AI. I don't understand. That's the Quasar magic, right? That's why I have. That's why I have an advantage, and I want to keep that. Right. So now I want to know how much did the BRICS leaders virtual meeting, did that accumulate any Bitcoin? All of a sudden, I've now got better answers to better questions. So I appreciate you asking that question about Quasar.
Oh, of course. It's really supercharging the abilities of traders everywhere to get the right information they need at a moment's notice so they can make the most informed decisions, for their own monetary and financial purposes. So it's a great tool out there, and we're happy to share it with the world. And we're super happy that you have been kind enough to share your wisdom, insight, and expertise with us this morning, Stephen. It is always a pleasure. Before we let you go today, real quick, if people wanted to learn more about you or Quasar Markets, what's the best place for me to send them?
Yeah, you know what? There's a couple things. It's quasarmarkets.com. You saw that. And then, of course, I have my own site. I'm about to release it to the whole public, and I'll pull it up for everybody so you can see that too. It's qmbigbeat.com. Look, you can see everything about me up here on the website. You can connect with me on LinkedIn. I expect everybody to do that as well. You'll see some videos coming out soon. My rules of trading are up there. My background, who I am. As I always say, the pedigree. So many people are in these markets. They're super knowledgeable. They've only been in 3 months or 6 months or a year. They're not super knowledgeable. This is my background, who I am. My psychology of how I've been doing things for over 34 years. A little bit about all the awards that we've won. I've won decades of awards. I mean, my walls are filled with awards to me, but I did it to do one thing, to make sure that everybody out there has access to the same data. It's not fair that some of these big companies out there have all this data. I wanted to bring it to the whole world, helping you filter all that noise out so that you as a trader will have a much better, clearer picture of the markets.
We love that, and we appreciate you, your tools, and your time, Stephen, and we can't wait to have you back on the show real soon, my friend. Thanks so much for joining us this morning. It's always a pleasure.
Thanks, Hank. Big fan, dude. Bye-bye.
Cheers. Yeah, enjoy your week. All right, we're taking a break, but when we're back, we got more of today's top stories and our next big guest that'll be joining us live here on the Blockchain Report, so stay tuned. All of that and more coming back at you right after this. All right, welcome back. It's time for the deep dive portion of today's show, and we've got not one, but 2 guests for you today, and these are the guys who know exactly where all that Bitcoin is hiding. One builds the go-to database for corporate treasurers, the other tracks the numbers and explains what they really mean. Together, they're the ones keeping score on who's stacking sats. Welcome to the show, Tim Kotzman and Ed Julien, everybody. Welcome to the Blockchain Report. We're super thrilled to have you. How are your Mondays going?
Fantastic.
It's beautiful weather, nice and sunny here in New York.
In New
Going up a
York,
little
oh
bit.
boy, you guys are
Okay,
very nice. You're living in the
There we go.
future compared to
Yeah.
us. Beautiful. Now, gentlemen, we got a lot to cover today. You both live deep in the Bitcoin treasury trenches nowadays, but I gotta ask, what were you up to before this whole Bitcoin rabbit hole pulled you in? Tim, let's start with you.
My background is actually as a consultant and then business owner in the land side of oil and gas. So leasing land, first for fossil fuel projects, oil, natural gas, and then actually utility scale solar, battery storage. So the whole gamut of energy. And then most recently, before the rabbit hole, the private equity side of it. So raising money, buying deals, and kind of fell down the rabbit hole from there.
Yeah, well, it sounds like you've certainly got a good grasp on the financial system. And Ed, what about you? Where did you get started in all of this?
Yeah, I always been on the the early adopter side of things. Bought my first Bitcoin in 2011, sold it in 12, then was gambling from there until about 2015 when I finally got it. And then 2019, thought, okay, I've got enough. I can just do entrepreneurial stuff, which I failed miserably at. Found a way to get a job in the Bitcoin industry with the Bitcoin conference. From there, went to Mara and then to Strategy for about 9 months. And Tim and I were in touch through all that with his involvement with True North, and found some opportunities to expand outside of Strategy. And Tim and I partnered to put together we're not sure what to call it yet. It's either Bitcoin Treasuries Media, Bitcoin Treasuries Advisory, but it's helping people understand this Bitcoin Treasury space.
Amazing. And that's something people are going to need more and more as this Bitcoin treasury strategy becomes more and more popular. We're seeing it every day. Before we get into that, though, gentlemen, we have all these amazing people in the space on our show, much like you two gentlemen. I'd love to know, what was that first Bitcoin moment like for each of you? Was it you got it right away, or did it take you kind of smacking your head against the counter a couple times for it to really galvanize in your mind like it does for a lot of us? How did that work for you, Tim?
Yeah, I think it was a little bit of both. I feel like I kind of got it right away, but I also read all the other papers out there and bought $5 of everything on Coinbase and then decided I need to just focus on Bitcoin. Maybe everything else is great, maybe it's not, but we'll leave that till later. So that's the short version.
Yeah. And after 14 years, I don't really remember. I say this all the time that we should have all been keeping, journals and seeing what our thoughts were. But like I said, at the beginning, it was just this other speculative thing to put money into. The first time I opened up my Coinbase app, when I was in Milan, and it had like 20x from the last time I looked at it. And so you get the addiction on the speculation part. But then I was living in Amsterdam in 2017, 18, and there seemed to be like a Bitcoin crypto ICO meetup every night. And so it was just a full immersion into it. There's a really strong group in the Bitcoin world here in Atlanta. And so we've really kind of coalesced around this Bitcoin mission. And so that's kind of where I am today. But I try to remember back and say, well, what was I thinking in 2017 when I met Craig Wright? And your mind changes in this space so often, it's hard to keep up.
Yeah, and you have to have an open mind with all of the new developments it seems like we're hearing all the time in the Bitcoin space, including your partnership here. Can you guys kind of go in a little to like, how did this Bitcoin Treasuries Media, or whatever you decide you want to call it, like come to be? What was the impetus behind it? How did it start? We'd love to hear that origin story.
Me too. Go ahead, Ed.
Yeah, me too. Go ahead. Tim, since he was a small child, had been thinking of different ways to do a podcast. And yeah, I mean, you got to be extremely flexible in this space. It's like a one-year business plan just doesn't exist. You got to be ready to see what's coming down the pipeline and how you're going to adapt to it. But Tim started a podcast, put on the orange tie, was getting great guests, and was just in the right place at the right time. The timing was perfect. When I was with Bitcoin Conference, got to experience how they do a conference, and then at Strategy with the Bitcoin for Corporations conference. And Tim had already decided to do a one-day conference about 6 weeks out, and I said, sure, I'll jump on and help you with this. So that was the conference part. But I mean, I think what's going to be one of the more critical parts of this is what we're doing in an advisory, in the sense that Tim and I both have names that are known in this space. We kind of know what's going on. We know who all the players are. We both have pretty good Rolodexes. And for our Gen Z listeners out there, the Rolodex was a thing you would keep on your desk with all the business cards. And I'm not going to stop using that word. It's called a Rolodex. And so this advisory part is we get inbound every day. We need an investment bank, we need a lawyer, we need a whatever. And so we're going to find ways to connect people with trusted partners, with people that we know are on the up and up, so that we could do our best here to be a small part of avoiding, an FTX or Celsius or something like that in this next downturn.
I like that. So trying to avoid those gigantic implosions that we've seen in the space numerous times. Love that. We need those out there. So, Ed, as you said, you were at Mara and Strategy. They're the, I think, number 1 and 2 of like the corporate Bitcoin holders in the game. But you said you were only at Strategy for about 9 months. Was that because you knew at that point you saw what Strategy was doing and you were ready to then jump ship to do your own thing, or what exactly happened there? I assume that was part of your road to where you are now.
Yeah, pretty much. It's I was hired to help them with their conference, and they've gone under quite an evolution in the last year or year and a half as far as what it means to be a Bitcoin treasury company, what it means to be a Bitcoin company, and so why I've participated in many different areas of Bitcoin, and so by being at that company, you're a little constrained in what you can talk about because it's SEC regulated, it's a public company. Additionally, I had an opportunity to join a Bitcoin treasury company that has now been announced in Mexico, where I lived for 13 years, fluent in Spanish, and so I knew that wasn't going to be possible while I was at Strategy. So on top of that, commuting back and forth to DC, so there was a bunch of reasons that lined up that just it made sense to go off and do something a little bigger.
Yeah, and you mentioned the Bitcoin conferences you were at before. Now you guys are actually putting on your own, I think, conference, right? Tim, can you tell me a little bit about that? What is it? What to expect? Who are the people that are going there? We would love to learn more.
Yeah, I actually had lunch with a friend who I didn't really fully understand that he's also an angel investor. And he said, "Hey, if you ever need cash for anything, just let me know." And I said, "Well, I was thinking about doing a conference, but this guy Fred out in California, he just like sells a couple tickets and then he puts the deposit down on the venue. And so I don't know that I would need any like seed capital or like an investor to do that." And that was actually kind of the beginning thought is, hey, get a venue, do something similar to what Kruger had done with his unconference format last fall in Santa Monica, which was, there is no stage. In that case, there is no speaker. There's just a thought leader that gets up. They talk for maybe a few minutes to kick it off, but then everyone's kind of standing in a circle, and it's almost like a Twitter space in real life. There's commentary, there's questions, and it's this real-time conversation. And Ed and I were actually both at that conference. We were in the same room and never met each other. He was he can explain what part of the room he was in, but yeah, it was just. I had several people say that was the best conference I've ever been to in my professional career. And these are guys that have been around for 20, 30 years in the corporate world. So the idea at first was to do a similar concept. And then when we incorporated some elements such as Sailor kicking it off with a keynote and a live stream, we thought, okay, well, we do kind of technically need a stage, but we're still going to keep that ethos of a town hall. I think it's a great kind of way to describe it that Ed came up with, to have people give a few minutes of their thoughts on it, but then immediately go out to the audience for Q&A, for commentary, and have a nice dialogue and back and forth and debate about a lot of the hot topics right now, including MNAV.
I love that. It sounds kind of almost like a mastermind for Bitcoiners and Bitcoin treasury people, rather than just like another boring conference, which is such a great angle. And who is attending this? Are this other business owners and business leaders that are maybe interested in kicking the bucket around their own Bitcoin treasury, or who is this really meant for?
Yeah, we currently we're capped at 350 for the conference. That's a fire marshal thing. There'll be 350 people in person. We need to get more discourse, right? We need to be talking about these things. And as Tim mentioned, there's a little bit of panel and presentation fatigue out there. And so this is going to be something that's a lot more interactive, a lot more about talking about these issues. So the 350 in person, you'll want to be in the room to say you were there when it happened, but also about 100,000 online through the different live stream channels, which hopefully Roxom as well, that'll be rebroadcasting this. But it's in the room, we're expecting about 60% investors, about 30% is treasury companies themselves, and 10% is service providers, the investment banks, the lawyers, et cetera. So it's a good confluence of those three groups because they all kind of want to talk to each other. The the high net worth individuals or the recently high net worth individuals due to these treasury companies. They're looking to see which of these ones can we trust, which of these ones can we believe in. And so that's a kind of a critical part of having that conversation in the room. On top of all that, we're going to have some of the big names in the space are going to be there, you know, telling where they are and what they're doing next, as they're showing here on this side screen.
Very cool. So it sounds like you're just serving a lot of orange Kool-Aid to people that were maybe interested in the orange Kool-Aid already, which is a great place to get more people on board and help them feel more educated and informed before they make a Bitcoin treasury strategy play of their own. What are a lot of the questions that you guys are finding you're getting from people who are looking into adopting their own Bitcoin treasury strategy that haven't already?
I think that the questions that we receive are they're far-reaching, but each jurisdiction, each country has got their own little twist, their own little angle on how this could be done. Saylor has written the book on how to do it in the U.S., and everybody is trying to follow that as far as behind as they are. But then when you start to look at a Mexico or a Thailand or a UK, there's always little angles to it that need to be addressed. Everybody wants to do it like strategy, but they're a long way off from doing that. So in the short term, it's custody, it's proof of reserves, it's legal ramifications. It's all these different parts of putting together a whole new way of doing business. Metrics, of course, is the big one. They try to measure these companies using old Wall Street nomenclature, old Wall Street metrics, and they just don't apply. And so how do you go to an investor base, especially a non-Bitcoin savvy investor base, and say, hey, here's my business, here's what I want to do. And it's just a blank stare because they want to hear the metrics that they've been using for the last 50 years.
Right. And Tim, as you're in these meetings with other business leaders who are maybe looking to run Saylor's playbook, you and I both know not everybody is Saylor, right? You have a visionary leader. He's been doing it for 5 years. Their cost basis is pretty low. What do you tell inspired leaders who are looking to run this playbook, but you can't run the same playbook if you don't necessarily come from that same team? Is that doable, or are you giving them alternative ways to start their own strategies or their own Bitcoin strategies that maybe they have their own playbook that differs a little from Michael's? How do you go about negotiating that with people who are interested?
Yeah, I think the first point is when you look at BitcoinTreasuries.net and you see 180 some companies that are Bitcoin treasury companies, those are not necessarily levered or doing the strategy playbook. They just are like a Tesla or a GameStop that have Bitcoin on their balance sheet. And some companies that you've never heard of that they may have even forgotten that they have Bitcoin on the balance sheet. So there's only a couple dozen companies that are really trying to do this 2x levered, if you want to call it that, sort of leverage Bitcoin equity, MicroStrategy playbook sort of plan. And the communication, the transparency, and getting up to speed on digital distribution, digital media, those are a lot of the conversations. I would tell everyone, and I have, whether I'm advising them or not, your earnings call should be the way that Strategy and Semler have done it. It should be video and audio, not just audio, on X and YouTube, so that you can, right? Everybody can see your face. You should have Q&A.
Yeah.
You should take it to that level. There's no reason not to. That's going to become the Bitcoin standard because, calling it the gold standard probably doesn't make sense. But between transparency and then the communication, which is certainly written, it's all of the media, it's actually creating that conversation. I think that's important, and there's a fine line between having it be so professional and stuffy that no one's gonna listen to it or read about it, and being a little too TikTok-y where you might be losing credibility with some folks. So I think it's we're birthing a new industry, and there are no hard and fast rules. And then the third aspect is you could just have Bitcoin on your balance sheet, or you could actually create Bitcoin yield with that. You could make it productive. You could have a product or service and in addition to that, have the Bitcoin actually do something. Is that a good idea? Is it not? You have people on both sides of that conversation. So a lot to talk about. And I firmly believe that 6 months from now, we'll see companies doing things that we don't see anyone doing right now. And it'll really redefine what a Bitcoin treasury company is.
Yeah, just to add on to
Yeah.
that, um, it's been really interesting to me the last year, uh, to try to say who is a Bitcoiner, what is a Bitcoiner, and what is a Bitcoin company. For example, uh, who's the biggest Bitcoin company? Well, is it Strategy because they have the most Bitcoin on the balance sheet, or is it Tesla because they're the biggest company with Bitcoin on the balance sheet? Um, who is a Bitcoiner? If somebody just says, all I care about is the treasury aspects, or all I care about is the art aspects, then does that make them not a Bitcoiner because they're not interested in the freedom money side of it, et cetera? The little story I always tell is, if Saylor had said we're going to be a diamond treasury company, would all the employees have to then wear diamonds all the time and learn how to grade diamonds? No, probably not. So how does that make you a Bitcoin company or not? You even talk to people, I won't name any companies, but you talk to people at some of these companies that you consider like crypto companies or Bitcoin companies, and they're like, yeah, I don't even own any crypto. And you're like, well, I guess not. I mean, if you worked at Waste Management, do you have to get excited about trash pickup? Or if you worked at the Boy
Right.
Scouts of America, is it okay to hate kids? It's like it's a company at the end of the day, and how they manage their treasuries seems to be independent. So it's been really interesting trying to get your head around what does this mean to be a Bitcoin company, and what does it really mean to be orange pilled?
That's super interesting, Ed. Yeah, it's like, do you have to embody the ethos of what makes Bitcoin like self-sovereignty, or is it that you're just the one most actively stacking sats makes you the biggest Bitcoin company? And you mentioned Strategy, formerly MicroStrategy. They clearly hog the headlines as of late. And Victor, can we bring up the Bitcoin Treasuries website really quick? So, gentlemen, I want to take a look at this. You know this website, bitcointreasuries.net, the one with the list. And as two people who are very deep in the space, are there any underrated players out there that you feel like are maybe flying under the radar that maybe embody this ethos of a true Bitcoin treasury company? I mean, Strategy's got the most, there's Mara, but we have a lot of players available. Are we able to bring up the Treasury's website?
Yep.
Oh,
There we go.
It's loading. There it is. Okay, great. So of our big leaderboard here, guys, is there anybody that the two of you are kind of looking at and you're like, I like the playbook that they're running right now, or maybe someone we should be keeping an eye out for out there?
Yeah, well, first I'll put in a shameless plug, but Arcadia, the one that I've joined in Mexico, does have an underlying Bitcoin business. It's an 8-year-old exchange in Mexico, and so there's this Bitcoin business underneath it that's positive cash flow, that's generating profits. That seems to me to be something that we should be looking for, is not only an underlying business that is Bitcoin related, but that is generating profits. I do have a lot of concern
Right.
for the ones that don't have an underlying business at all. Right? It's just a question. It then becomes kind of like a REIT or something where it's just a financial instrument. Is it doable?
Right.
Is it going to work? Yeah, probably, but I think Strategy has proven, Mara, Semler, that if you don't have that underlying business generating profits, when times get tough, where are you going to get the cash to pay the previous investors? It's a good question. But I mean, I have some favorites on here. A lot of these, at least 30 of these, are going to be at our conference. So I am not going to put my foot in my mouth and choose one. But maybe Tim will.
Yeah, I mean, again, I think don't worry, Ed. I'll put my foot in my mouth. I think the difference, again, going back to leveraged versus not leveraged, and I remember my first
Right.
Bitcoin conference was Miami 2021. Jack Dorsey on stage. He said, "Look," he basically said, "Bitcoin's what I'm going to do with the rest of my life." And so I think Block really embodies a lot of really cool projects, but they're not really a leveraged Bitcoin. They just kind of have some Bitcoin on the balance sheet. So shout out to Jack. There's a couple of Jacks running around here, but yeah, Jack Dorsey in particular.
Yeah.
And then you looked at the top of the list. I mean, Bitcoin Standard Treasury Company, which I believe is Adam Back's company that's kind of in the works. I mean, there's just some iconic names and faces, right? Adam Back, Michael Saylor, that hard to argue against them, at least having their ethos and their heart in the right place. So really, really interesting times and a cool list that changes all the time. So definitely recommend people subscribe to the .NET newsletter and you know definitely a great resource.
Yeah, and we were on another
Yeah,
call
no.
earlier this morning that asked us about the ETH treasury companies, Solana treasury companies, and God, there was a world coin treasury company announced this morning that now world is up 40% today. It's just insane. Are these altcoin treasury companies going to make it? I mean, the saying that I always say is there's no cryptocurrency because none of it's really used as currency. There's one crypto asset, Bitcoin, and the rest are crypto companies. You look at the list of the top 10 on uh, what's the name of the website? Where whatever. You look at the list of the top 10 cryptocurrencies year by year over the last 10 years, and not many of them survive. And so is Solana still going to be around?
Right.
Probably. Is Ethereum still going to be around? Probably. But you want to bet your whole treasury on it that something's not going to go wrong and the network comes down or who knows, right? And so we try
Yeah.
to not comment on those altcoin treasury companies. It's a good play. They'll probably get richer quicker, but there's just so much more downside.
Yeah, and I got to say, this feels like a direct shot at my Dogecoin treasury company, but that's okay. I don't
No,
mind
dude, it's
that.
the bonk treasury company, man. I may
Bonk
start it
treasury.
myself.
That's what all the kids are doing is the bonk treasury. Oh god.
Bonk treasury
That
company,
kind of
man.
begs the question, though, guys. Is two people who are very much in the treasury space. Ed, you touched on it. You have these companies that are doing it with maybe very little underlying or kind of flailing businesses. How do you think this is going to play out when eventually Bitcoin retraces significantly, like we always see that it does, and all of a sudden we have these, companies that bought Bitcoin maybe around in the one teens, maybe the low 120s, who are now underwater on that investment for a certain amount of time because of the natural corrections that Bitcoin takes. What's going to happen there? Are we going to see a lot of these players flushed out of the market and then maybe a Bitcoin downturn as a result of that price action wise? Was that always going to be a natural part of how this works? Ed, what do you see happening going forward as we kind of reach what would seemingly be the near the end of this current bull market and into what would be the next cycle? How do you see this kind of playing out?
Yeah, I mean, I am a cycle guy. Having worked at Mara, I see how the miners cycle their business through buying more miners, shutting miners down, finding cheaper energy. So, that whether it's the power laws or something else, there is a 4-year cycle built into this on purpose. How much of a correction we'll see next year, I'm not going to make any bets. But if you're following the Sailor playbook, then you should be planning your debt based on those cycles and having at least 4, if not 5 years built into that debt so that as long as the price is not lower 5 years later than the current date, you're never going to get called on that Bitcoin. Now, are they all doing that? It doesn't look like it. It looks like there's some that are taking 1-year debt instruments that are in some cases predatory. And you're just looking at it saying, well, wait a minute, how are you going to pay this debt off next year? Oh, we'll just raise more debt. So is somebody going to screw it up by planning their debt incorrectly? Is somebody going to do self-custody or lose their keys? Probably. And that one uh, smelly shirt is going to make the whole closet smell for a while. And that could be a cause for some, panic selling, some runs on the market or whatever. But in the long run, as Bitcoin will persevere, we all know it will, these treasury companies are going to just get more and more powerful, for lack of a better word. So it's not something that I mean. I've been trying to time the market for 14 years, and I fail every time. You got to buy and hold and go against what your feed tells you, and just bear down. You want to add on to
Yeah.
that,
Tim, do
Tim?
you share that sentiment? Yeah.
No, I take the other side of that coin. I don't think we're going to $1 million by the end of the year, but as as Tom Lee said on CNBC this morning, he's calling for $200,000 Bitcoin by the end of the year. Saylor, when he was asked about it by Ross Sorkin this morning, said, yes, many analysts think Bitcoin will be above 150,000 by the end of the year. One of the most recent Robert Breedlove podcasts, he was interviewing the CEO of American Bitcoin that just went public on the NASDAQ last week. And I don't know where these numbers came from. Nobody knows the future, at least no one that I've met. But he was spouting off numbers that were very interesting. So far this year, I believe the inflows into corporations on the Bitcoin side is about 140 billion. He said they're expecting 200 billion by the end of the year and as much as 350 billion next year. So if those numbers are in any way, shape, or form correct, maybe we grind higher, and of course there'll be volatility. So maybe the truth is somewhere in the middle.
That's fair. And you mentioned you're still a cycle guy. You believe in the cycles. But one of the interesting narratives during this cycle, we've heard it specifically from Matt Hogan over at Bitwise, is that the cycles as we know them are probably not going to be the same going forward, very much in part to all of this, institutional money that we're seeing get flooded into the market. Do you think that's going to be the case? Are we going to those volatility swings, are they just going to be muted going forward and everything will still be a slow up and to the right? Or how do you see that playing out? Will we still be seeing the cycles as we have in the past, or is that, of the past at this point?
Yeah, I mean, that's what the math says. The math says that the cycles should get, less and less volatile, right? And you'll get more compression on those cycles. But if you, on YouTube, there's a series called The Physics of Bitcoin, and it gets into this about the five different stages of mining and then retail or whatever that exuberance is, and then how it goes too high. So if by Christmas, we're looking at 350, even just as a made up number, yeah, that's going to be too much. And that's going to cause the market to say, whoops, we went too far. And then once you start selling off, you sell off like crazy. That's my story. I'm sticking to it for now. If I'm wrong, then I'll never be on another one of these shows again. But if I'm right, I'll regret not having written the book on this. I mean, I have kind of written a long paper, which isn't really turning into a good book yet, but it's, Bitcoin was discovered, not invented, discovered. It's sound money. It's perfect code. It's perfect math. It's the way to do money. And Copernicus and Galileo had the same resistance when they first said, you know what, I'm not sure that the Earth's at the center of the universe. But the people who had the interest in the Earth being at the center, the church, were like, well, no, we can't even listen to that. And so you're getting the same thing with governments and Wall Street that are saying, no, you can't tell us we're getting rid of the fiat system. That doesn't work for us. And so they're resisting it. But if Bitcoin is a discovery of sound money and gravity was a discovery of why the Earth's not at the center of the universe, the thing I keep saying is that for Bitcoin to not go through the cycles as the math and the code dictate, it would be like Earth taking a trip around Jupiter. That's not how gravity works. That's not how sound money works. And so that's kind of where my head is right now. And if I'm wrong, you'll never hear from me again. But that's 14 years of being in this and where I think we are.
That's part of fun of the game of the Bitcoin universe, though, those prognostications of the future. And Tim, while we're at it, what do you think? Are we still stuck in this pattern of choppy cycles, or are things starting to move a little more slow and steady up into the right going forward? What do you think?
Yeah, I mean, to your point, I think we will see more and more muted cycles, less and less volatility. I think at a certain point, it could also surprise to the upside because of the scarcity factor. I think Jeff Park has written a little bit on that over the past year. But yeah, I think everything kind of rhymes, right? You had a few different things this time. You had an all-time high before the halving, and now everybody thinks we should be at 2, 3, 400,000, and we're still at 100. So whatever you think's going to happen, maybe just hedge it to the opposite. But I think the institutions are here, the corporates are here. We could spend a whole hour just talking about the preferred products from Strategy, and that it looks like Metaplan's going to be rolling out. I think they'll be slow to start. They have been slow to start, but as they ramp up, I can see a world where you're raising billions of dollars a week and then tens of billions of dollars a week out of those fixed income markets. And that's kind of my why I think we may grind higher with a lot of volatility.
You know
Of
where it'd be
course.
would be a fantastic place to kind of hear some thought leaders and experts talk about this, and
Tell us.
maybe be in the room with the smartest people in the room. I think September 17th in New York City at the Bitcoin Treasuries Unconference would be a fantastic place for you to
Well,
be.
for those who are joining late, tell us a little bit more about that, Ed.
Yeah, so September 17th, New York City, 350 people in the room, 100,000 online, but it's going to be one of those events you want to be in the room, shaking hands, meeting people at the tables. But yeah, we'll be hosting the biggest thought leaders in the space, bitcointreasuries.media. Only, few dozen tickets left. So I will create a coupon code called Roxom if I haven't already for 21% off. So at the conclusion of this episode here, you can go to that same get tickets and get 21% off your ticket using coupon code Roxom.
Beautiful. And this type of event, guys, is so important. And it was kind of brought up earlier. It seems like Bitcoin is undergoing an adoption cycle kind of akin to the internet a little bit, right? You get those early adopters. There's this kind of mania phase. It comes back down. People think it's over, but it's only just beginning, which kind of begs the question, do you think we're at a point right now where not having Bitcoin on your balance sheet is kind of like not having a website back in 1999? Are things about to move that fast, that soon, so people need to educate themselves sooner rather than later? Where do you think we are on that timeline?
You got that one, Tim.
I mean, I see a lot of 1996 floating around the internet. So maybe we're even a little bit earlier. Because, yeah, and many people have said this, every company will be a Bitcoin treasury company. They'll have Bitcoin in their treasury. Just like you don't walk around your downtown Market Street and say, you point at one business and say, they're an internet company. And you look at the next business, right? And it's a restaurant. And you say, they're an internet company because they have a website. And you're like, no, every business has a website. At least most businesses these days have a website. So most businesses will have a Bitcoin on the treasury, probably with very few exceptions. It's just a matter of time. And yeah, I mean, at the sake of repeating, I just think this is evolving at a very quick clip. And what's going to emerge is something that we really haven't seen before as the very brightest minds in the world figure out and Bitcoin backed people, meaning that's their background, and TradFi backed people really separately and together coming to the table and saying there's whatever their reasoning is, right? Maybe it's just we want to make money, right? There's a lot of incentives at play. And that's really just going to take us through from retail to now corporate, institutional, and nation state adoption to this the global store of value.
And don't forget your history either. I mean, turn to the 18th century, the textile revolution. Textile companies were the biggest in the world. In the mid 1800s, railroads. What else after that? Next turn of the century was electricity. I always try to remember these in order. And then you had oil, automobiles, then the microchip at the turn of this century, and now you're on to blockchain and Bitcoin. So to think that Strategy is going to be the biggest company in the world, many people may scoff at, but I mean, I was at least alive at a time when no one had ever heard of Bill Gates or, Apple or anything. So yeah, these things can happen within our lifetimes, and this is that next revolution.
Yeah, and right now this year has kind of been interesting, right? We're seeing so many bullish narratives for Bitcoin. We're seeing the Bitcoin treasury companies, obviously. We're seeing favorable government regulations, specifically here in the United States. Yet it feels like despite all of this positive momentum, Bitcoin feels a little underpriced right now. So as two guys who have the inside slant on what's going on, what do you think is the next big catalyst we're waiting for to see that next big leg up? Is it the government coming out and say, hey, we're actively acquiring Bitcoin? Is it maybe a popular like Fortune 5 company saying they're actively going to start acquiring Bitcoin? What do you think it's going to take till we see that next big like mania level take hold? Because I feel like we haven't really seen it the way I would have expected given all the news this particular cycle.
Yeah, I'll get a little philosophical on this one as I was earlier. Uh, I think you get to the point after seeing, when it pops and why it pops, or why it goes down and when it goes down, and you're trying to correlate it to some news story, and you rarely can. This comes back to the cycles and how maybe the same way that we can't affect gravity, we can't affect the price of Bitcoin. And so we always want to say, what's it going to take to move the price? Well, the supply is not affected by anything. Another block is mined every approximately 10 minutes. Nothing changes that. So you're not really asking about Bitcoin. You're asking about the denominator. You're asking about the dollar and what's going to weaken the dollar more. I think that's the big question. What's going to weaken the dollar to the point where the shorts can't hold on anymore, to the point where more corporations are saying my ice cube is melting, my T-bills aren't worth crap. And so it's not about who's investing in Bitcoin, because that's like a reaction to Bitcoin. It's what's causing currencies worldwide to fail. You go to Buenos Aires, they get it. It was less than 6 months ago that the Argentinian peso hit 100 million pesos per Bitcoin, 1 peso per sat. And now it's at 125 million. And so if you're in Buenos Aires, this isn't anything to even think about. It just makes sense. The dollar's a lot tougher because people have been able to hold on. So to reframe your question is, what's going to be the next problem? What's going to be the next trigger that's going to have people lose faith in the dollar, that they're going to fly to Bitcoin? And I could come up with a dozen things, but they're all conspiracy theories, and I only do that over beers.
Fair enough. Those are all good points. Good points indeed. Well, gentlemen, we're coming to the end of our time here today. But before we go, we're going to play a quick game. This is something we play with all of our guests here, okay? As we know, a big part of this ecosystem are the crazy price predictions. We're always hearing thrown out left, right, 1 million by the end of this year, 250, what have you. We've been taking the end of year predictions. This is all for fun, not financial advice, of all of our guests. Whoever wins, I'm going to send a Roxom Patagonia vest to at the end of the year. We have a leaderboard. I don't know if it's physically ready to put up on air yet, but it's got some nice names up there, and we want to add the two of you to that list. So right now, we're at about 112 per Bitcoin. By the end of 2025, Tim, Ed, what do you think you expect the price of Bitcoin to be at by that time? It's like Price is Right. So I want one number, whatever you think, just for fun and games. Tim, start us off.
327,000.
Ooh, 327. That's spicy. I like it. Ed, what are you thinking?
I'm going to go with, by the way, I'm going to shill a website that I stumbled across. It's called proofofprice.com. It's really cool. They're basically doing this. They're taking, anytime someone on Twitter comes up with a price prediction, they log it and they put it on the graphs and everything. It's pretty cool. Check it out sometime, Proof of Price. But I'm going to go with 212,121. That's 21, 21, 21, right?
It. I like it. A man of symbolism. I appreciate that.
Yeah.
That seems to be popular in the Bitcoin treasury space too. They're always doing like these symbolic number buys all the time. I love it.
Yeah, I see that he pulled
Now,
up the
before we
proof
let
of
you-
price
Go
there.
ahead.
Can you bring that to the main screen for a second? Let's see.
Yeah, I think they're getting it up here for us right now. Let's see if we can bring that up to show the viewers at home. Here we go. Okay, that's fun.
Soar.
We'll have to
Can
check
you
that
click
out.
click on that button there and it'll, yeah, so then over on the right, you've got the different predictions with a link to Twitter and stuff. And yeah, it's pretty cool. Accountability, I think, is what's important, right? What you're doing right here is awarding a prize to whoever's right, but we should also be going back and saying, hey, these people were really wrong. You know?
Right. No, absolutely. We preface it that it's all in good fun. But if people are looking to get the real signal out there and get from the horse's mouth, again, you guys have this conference coming up. One more time, let our audience know. When is it? Where can they get their tickets? Who's going to be there? And why should they go? Real quick. Ed, why don't you lead us off?
September 17th, 10 a.m. at Levon Midtown in New York City, the Bitcoin Treasuries Unconference NYC. You can get your tickets at bitcointreasuries.media. Use coupon code ROXOM for 21% off of your ticket. We'll also be having a post party at PubKey. You can only get into that post party with a Bitcoin Treasuries Conference Unconference wristband. The party on the 16th, the night before, will be open to the general public. It will be a mess. There will be people drinking Pabst Blue Ribbon in the street in New York City, which I've been told is not that uncommon. But this is going to be one of those events where you want, much like Bitcoin 21, where you want to say, I was in the room when that happened.
Amazing. And I
Next
know you guys are
Wednesday.
also active on this. Go ahead, please. Yeah.
Oh, no, it's not the 17th. It's next Wednesday. Holy crap.
Oh,
Next
wow.
Wednesday.
Coming up. Those tickets are going to go
Absolutely.
quick. People better get them fast. And also, I know you guys are active on the Twitterverse and everything. What's the best place for our audience to find you if they want more hot takes? Or Tim, you have that amazing show of your own. Where can our audience check it out?
At Julien and at Tim Kotzman on X.
Yeah, and I think all the links are on our bitcointreasuries.media website. You can find everything to find us there at bitcointreasuries.media. There's also a specific X handle, which I never remember. What is
At
it?
BTC Digital Comp.
Yeah, at BTC Digital Conf.
There we go. Beautiful. Well, gentlemen, I got to thank you again for joining us today. It's an absolute pleasure having you and having two people that are really on the inside of the whole treasury place. It's been great learning and hearing about your experiences. And we can't wait to hear about the conference. So please keep us abreast on what happens there. And we'll have to have you back sometime because I want to give one of you that Patagonia. And if one of you is right, chances are I'm going to be putting a down payment on my Lambo. So we'll be in good shape all around. Gentlemen, thank you so much for joining us. And I hope you have a great rest of your week, guys.
Thank you.
Thank you.
Cheers. Thanks, guys. All right, we're taking a break. When we're back, bullish, bearish, or BS coming up on the blockchain report. Stay tuned. All right after this.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
All right, we're back with more Bull Run. We got a couple of stories to go over before we wrap it up. This next one, of course, is about Bloomberg's Mike McGlone. He says Bitcoin could crash to 10K from 112,000 today all the way back down to 5 digits. Why does he think this, though? Well, because Bitcoin is too stretched against gold and equities, he says. He even dropped a chart showing Bitcoin gold in the S&P 500 to make his point. Right now, 1 Bitcoin buys 35 ounces of gold. McGlone says that ratio could fall to 25 as commodities rotate downward. Or in other words, prepare your portfolio for the world's most expensive bungee jump. Meanwhile, billionaire Tim Draper is doubling down on his moonshot prediction. He says Bitcoin will hit 250K before the end of this year. According to Draper, the big driver is institutional FOMO. Banks, boardrooms, and Fortune 500 companies that mocked Bitcoin just 2 years ago are now scrambling to buy and figure out custody. Draper's quote, "It's becoming irresponsible not to own Bitcoin." So on one hand, you have Bloomberg warning of $10,000 Bitcoin. On the other hand, you have Tim Draper promising a $250,000 coin by Christmas. That's a $240,000 gap in predictions, and only Bitcoin could inspire that level of disagreement. The irony, both forecasts prove the same thing, which is Bitcoin is now so central to global finance that nobody can ignore it. You either think it's a bubble waiting to pop, or the most important asset of the century. There is no middle ground anymore. And whether you're betting on the crash or the moonshot, Bitcoin's gravitational pull keeps on getting stronger. And a Bitcoin whale just rolled over in bed for the first time since 2012 and moved over $52 million worth of BTC. Yes, this address has been dead and quiet for nearly 13 years, collecting dust while Bitcoin went from nerd money to 6 figures. Blockchain data shows the wallet holding 479 Bitcoin finally decided to stretch its fins. And by stretch, I mean it moved more than 80 Bitcoin worth about $9 million to fresh addresses. Not all of it, of course, because nothing says I've been asleep for 13 years like moving a chunk and leaving the rest like forgotten pocket change. This awakening is part of a bigger whale migration that we've seen lately. On August 29th, another whale dumped 2,000 BTC, worth around $216 million, onto Hyperliquid's exchange and cashed it into Ethereum, the crypto equivalent of selling beachfront property for timeshares. Earlier in the month, a whale split 670 BTC, about $75 million worth, into 4 wallets just to open leveraged ETH longs. Because apparently, being a Bitcoin whale isn't exciting enough without pretending to be a degen on margin. Then another whale moved over 3,000 Bitcoin after a decade of silence, proving even the most patient hodlers eventually get bored. And in July, a mysterious whale moved 80,000 BTC after 14 years. And that's not a splash, that's a Bitcoin tsunami. Institutional heavyweight Galaxy Digital even admitted they executed that one, calling it one of the largest rotational Bitcoin transactions in history. Now, before you assume these whales are eccentric billionaires sipping cocktails on a yacht, remember, whales aren't always individuals. Many are companies that mined Bitcoin back when GPUs were the cutting-edge tech. So what happens when these whales wake up? Well, markets start panicking about sale pressure. Traders assume big holders are cashing in, even though experts argue that sales often prevent massive price swings. And the charts, they back that up. Bitcoin was recently trading underneath 110K, down more than 2% in the last 24 hours then. It's also down nearly 12% from its all-time high of 124K set last month. So for the last 2 months, Bitcoin has been hovering between 110 and 120K, like it can't decide if it's tired or hungry. Sounds like everyone's girlfriend ever. And in the prediction markets, nearly 70% of respondents are betting Bitcoin will dip to 105 before it breaks 125K for new all-time highs. So here's the headline. One whale moves 52 million after 13 years, and suddenly every trader thinks Moby Dick is about to crash the market. But the real story? Whales can thrash around all they want. Bitcoin's still holding 6 figures, and the ocean is only getting bigger. All right, it's time for bullish, bearish, or BS. Let's run the stinger. All right, it's time for bullish, bearish, or BS. This is the part of the show where we recap today's top stories and see how things are looking for Bitcoin. First recap, Congress is finally telling the SEC and CFTC to play nice, clarifying that tokenized stocks are still stocks, NFTs aren't securities, and self-custody wallets are safe. It even forces regulators into couples counseling before they can sue anyone. I'm calling bullish on this. I mean, clearer rules reduce regulatory FUD and give companies confidence to dip into Bitcoin. The less people fear Gary Gensler showing up in their kitchen, the more likely they are to stack sats long term. So I'm bullish. Next up, we got Bloomberg's Mike McGlone says Bitcoin is too stretched and could crater to 10K, while Tim Draper claims institutions will push it to 250 by the end of this year. That's a $240,000 gap in price predictions. I'm calling BS on this. All right, price predictions this extreme are basically just entertainment. What matters now is that Bitcoin is the centerpiece of the global financial debate, which ironically is bullish in the long run. So ignore the circus. Bitcoin keeps pulling gravity, but I'm calling BS on that story. Last but not least, a dormant whale just shifted 479 Bitcoin worth nearly 52 million bucks, with 8.8 million hitting new addresses. Traders panic when whales stir, but historically these moves don't crash the market. So I'm calling bearish on this in the short term, okay? In the short term, boo, I know. Whale movement sparks fears of sell pressure and can drag price down a few percent in the short term. Long term, it doesn't dent Bitcoin's trajectory at all, but it does keep markets feeling a little twitchy. Whales make waves, but the ocean's still feeling pretty bullish. So today's tally, 1 bullish, 1 bearish, 1 BS, which means today is a load of BS. All right, we got Congress tossing bones, analysts screaming extremes, and whales making cameos. Today's news doesn't move the needle much, the noise is loud, but Bitcoin is still hovering near 112K, waiting for that next real catalyst. Well, that is a wrap for today's show, boys and girls. As always, thanks for tuning in to the Blockchain Report with us. We're here each and every weekday, 10 a.m. to 12 p.m. on Mondays, Pacific time, and we'll be back to our normal time, Tuesday through Friday of 8 a.m. to 10 a.m. Pacific. Make sure to like, follow, and subscribe to RoxomTV and me at Hank at RoxomTV if you haven't already on every platform you choose to waste your time on. And I will see you all tomorrow for more Bitcoin bedlam and crypto chaos right here on the Blockchain Report. Until then, sayonara and hodl on.